Good day, students. I will be doing this question 3, which is a question on cash budgets. It reads as follows. Starlight Limited decided to prepare a cash budget for the month of March and April 2011. So that means we will be doing a cash budget for the 2 months, which is March and April. The following information has been ascertained to prepare the cash budget. So we are given the information below in order to prepare the cash budget. Number 1 says a favorable bank balance of 12,000 per cash book on the 1st of March in the year 2011. So we have our opening bank balance on the 1st of March, and that opening balance is 12,000 rands. And it is noted that it's a favorable bank balance. Number 2 says that detailed information is in respect of sales, material purchases, overheads, and labor are given as follows. So we are given the detailed information regarding the material that was, or regarding the sales, regarding the material that was purchased, regarding the overheads incurred, and also the labor cost incurred. Then we are given our months for this information, which is December, January, February, March, and April. So this information is for this month from December until April. And we are given our total sales, which are made of cash sales and credit sales. Then after we have material purchases. So now this is material purchases budget. If you remember, we have done material purchases budget. So this information will be from the material purchases budget, more especially the budgeted one, which is for March and April. Then we have overhead cost, and we remember that there is also a budget called overhead budget. That means when we speak of the month of March and the month of April, because these 2 months are budgeted and the previous month are actual. So now this will be coming from the budgeted, or the budget of the overhead cost, which is the budgeted, the overhead budget. And we have the labor cost. Therefore, again, once again, with regard to the last 2 months, which is March and April, this information of 10,000 and 8,000 will be coming from the labor cost budget. However, the actual one has already actually took place. Then after, we are told under number 3 that the sales stated above, which is the sales given above, before taking into account any discounts. So now the sales that we see above are before we took into account the discount. Then it is said that the company offer the following discounts to their potential buyers on the above sales. So now there are discounts that are given to the customers, and these discounts are 10% on cash sale. That means customers who bought for cash, and we have seen that our sales are divided into cash and credit. That means customers who bought for cash, therefore they are given a 10% discount. However, those who buy on credit, they are given 5% discount if their accounts are settled within 1 month following the month of sales. That means if the customer bought on credit and the customer bought in the month of December, and he makes the payment or the settlement, because they say if the accounts is settled within, then if the customer settles in the following month, which is the month of January, settling the seed that were bought in December, therefore now a 5% discount will be given to that customer. Then after, under number 4, it is further stated to us that debtors are expected to settle their account as follows. So now this is how the settlement of our debtors is expected to take place. We have 65% within the month following sales. That means if the customer buys in December and he pays 65%, he pays in the following month, then he normally pays 65% of that. Then 25% is collected. Remember, this is the debtors collection period. So now how money will be collected from our debtors. 65% will be collected in the month following sales. 25% will be collected in the second month following the sales, and 8% will be collected within the third month following the sales. Then after, we are told that 2% will be irrecoverable. That means 2% will be a bad debt. And we know that bad debt is not a cash, it's money that the debtor will not pay us back. So now the 2% will not be recorded in the cash budget because there was no cash received because of the bad debt. However, the rest of the percentage of the credit sales, which is 65%, 25%, and 8% will be received, and that will be recorded in this cash budget for the period that we are doing the cash budget for. The number 5 says that creditors are paid as follows for material purchases. So now they say all materials are purchased on credit. That means all the material that we see here, which is material purchases, all the material is bought on credit. So now the material that is bought on credit, they say that 60% on delivery within the following month of purchase, subject to a discount of 2%. That means we buy on credit this month. Let us say we buy on credit in the month of December. When we make a payment in the month of January, circling 60% of what we bought in December, then we only pay 60% of that, and a discount will be given if that is the case. Then the other 40% is paid to our suppliers in the month following the month of purchase. And take note, they say 60% on delivery within the month of purchase. That means now if we circle or we make payment of 60% on delivery, that means when the material is delivered, therefore now 2% will be a discount received. Then 40% will be paid in the month following the purchases, and there's no discount when such payment take place. Then under number 6, it is stated that the company delays the payment of overhead cost on average by 1 month. However, labor, which is wages, are paid during the month incurred. So now that means our expenses, that means our overhead cost, they are delayed by 1 month. In other words, overhead incurred in December will be paid in January. The one that were incurred in January will be paid in February. So now that means our overheads are paid 1 month later. They accrue 1 month. However, labors or wages are paid during the month they are incurred. So now with regards to the labor costs are paid in the month in which they are incurred, unless you are inviting a protest. Then on the 31st of March 2011, equipment with the carrying value of 13,000. This is the carrying value of the equipment of 13,000 was sold at a loss of 4,000. So now whenever a product is sold at a loss, it means it was sold at a price lower than the carrying value by 4,000. So now it means the sales or the selling price was 13,000 minus 4,000, and that will give us 9,000. So now 9,000 is the amount that was received, and 4,000 was the loss. Remember, this is a cash budget. We focus on the cash that flow into the business or out of the business. So now this will be recorded as proceeds from the sale of equipment. Proceeds from the sale of equipment. Proceeds from the sales of equipment, or from the disposal of equipment, if you call it like that, from the sale or disposal, from the disposal, the right term, the disposal of equipment. So now this is the amount that will be recorded, 9,000. That is the cash that we received, which was lower than the carrying value, and therefore now that will be the amount received. Then after, we are required to prepare a cash budget in column form for the month of March and April in the year 2011, and it says note, there is no need to do cumulative budget for the 2 months. So now they say we must not do cumulative budget, we only do the cash budget, the simple budget. So now let us then start with the two budgets for the 2 month, and we know that we are only focusing on the cash because this is called cash budget. Then we say cash budget. Cash budget for 2 months, or cash budget for Starlight Limited. And this cash budget is for the 2 months, which is March and April. It is for March and April. And we have an opening balance. Opening balance. And our opening balance was 12,000. Then we say estimated receipts. Estimated receipts. Then we have our cash sales. We have our cash sales. Then we have collection from debtors. Collection from debtors. Or debtors collection. We sold the equipment, if you still remember. Proceeds. We had proceeds from the disposal of equipment where money was received. Proceeds from the disposal of equipment. Proceeds on disposal of property, plant, and equipment. Then this will give us cash available. This will be cash available. Then after we have estimated payments. Estimated payments. We have cash purchases where we bought on credit. Then we have payments to suppliers. Payments to suppliers. Then after we have two expenses, overhead cost paid. Overhead cost. Overhead costs paid. Then labor cost paid. Labor costs paid. These were the only expenses that we have. Then after we'll have a balance. Balance. Balance at balance. Oh, let me say closing balance. It could be a surplus or a deficit. So now I have done all the skeleton now for the cash budget, and we know that there will have to be a separation between the two. There has to be a separation between the two. Then we do our workings. The next page we do our workings. And our workings, we start with the debtors collection. In our workings, we start with the debtors collection. Or let us just calculate our cash sales. So now we start with our cash sales, and we know that these are the cash sales that we have. And out of the cash sales, we know that 10% on the cash sales is given. So now there is a 10% discount on cash sales that is given, and 5% is on credit sales if the account are settled within 1 month following the month of sales. So now we are still focusing on the 10% of the cash sales. So now remember, we are doing a budget for March and April. So now we only need cash sales for March and for April, and we give a discount on that. So now how do we do that? We go to our cash sales and we say our cash sales for March amounted to a total of 17,000. Then we say 17,000. Out of that 17,000, we know that 10% of the discount will be granted. So now that means only 90% will be received. Then we multiply this by 90%, then it will give us the 15,300 rands, which is our cash sales money that would have been received. Or else we could just say 17,000 first times by 10%, then that will give you 1,700. Then this is a discount. This is a discount. Therefore now we say cash sales less discount, and in other words we'll have to say 17,000 less 1,700. That still gives us 15,300. So now cash sales for March will be 15,300. Cash sales will be 15,300 rands. Then for April, we look for the cash sales after the discount has been taken into account. There is April. Our cash sales were 16,000. That means we only receive 90% of that because 10% will be a discount. Then we say cash sales for the month of April, it is 16,000. Then we say a discount of 10% will be an amount of 1,600 because that is 10%. Let us prove it. 16,000 times by 10%, that will give us 1.6. Then we say 16,000 minus 1,600, we get 14,400 rands as our cash sales for the month of April. Or else we could have just said 16,000 times that by 90% because 10% was a discount. Then you still get to 14,400 rands cash sales for the month of April. That will be 14,400 rands. Then now we do debtors collection. Then when it comes to debtors collection, we need to do our workings. Debtors collection. Our debtors collection, now we know that we are doing it for 2 months, which is the month of March and April. We are doing it for 2 months, which is the month of March and April. Then we have debtors list. Or I can just say credit sales. Credit sales. Our credit sales start from the month of December. Our credit sales start from the month of December. So now we start with the credit sales of December, which is 8,000. Then we say in December we made sales. In December we made sales, and we know that we collect 65%, 25%, and 8%. We collect 65%, and if 65% is paid in the month following sales, then 5% of the discount will be granted. We know that there was a discount of 5%. So now we must not forget that discount of 5% even now, because 5% on credit sales if the account are settled 1 month following the month of sales. So now let us do the collection, and we say in December we had credit sales of 8,000, and we know that 65% of that will be paid in the month of January, but we don't do a budget for January, and 25% will be collected in the month of February, and we don't do budget for the month of February, and 8% will be collected in the month of March, and we are doing a budget for the month of March. Let me just repeat that in case I lost you. It's very important. Remember, we are doing debtors collection for the sales that we made in December. And in December, we sold inventory on credit that was valued at the selling price of 8,000. So now we say 65% of that. That means 65%, here is the debtors collection. 65% of that 8,000 will be collected within the month following sales. And the month following December is January. That means 65% will be collected in January. And we are not doing a budget for January, so we ignore that. 25% will be collected within the month following the month of sales, which is February. Then that means second month, February, we are not doing a budget for February. Then again, we ignore that and we ignore that. However, 8% of the sales of December will be collected in the third month, and that third month will be March. So now that means 8% of the sales that were made in December will be collected in the month of March, and we are doing a budget for March. That means now we just have to do our calculations, and we say 8,000 times by 0.08, then that will give us 640. That means 640 is the 8%. 640 is the 8%. That will be collected in the month of March. So let us go and we record that in our calculations or in our workings. We record that. Then we say in December we have an amount of 8,000, which we multiply that by 8%, and that 8% is the collection in the month of March as 640. In April, there is nothing to be collected because 2% is irrecoverable. Then we come to the month of January. The month of January, we check how much was our credit sales. And our credit sales for the month of January amounted to an amount of 9,000. January, these were the sales for January. These were the sales for the month of January. So now we know that out of those sales, 65% will be collected in the month following, within the month following sales. And the month following sales, which is following January, is February. That means 65% will be collected in February. And don't forget that when we collect that in February, a discount of 5% will be granted. Don't forget that. So now a discount of 5% will be granted, but we are not doing a budget for February. So now we ignore that. And 25% will be collected within the second month following sales. The second month following sales will be the month of March. And when we collect 25%, there is no discount. And are we doing a budget for March? Yes, we are doing a budget for March. That means now out of the sales of 9,000, 25% will be collected in the month of March. Therefore, now that will be cash that is expected to be received in the month of March. So now we say 9,000. We multiply this by 25%. It will give us the amount that we estimate to collect in the month of March, which is from the sales that we made in January. Then now we say 9,000, credit sales of January 9,000, times that by 25%, then it will give us 2,210.50. This is what will be collected in the month of March. Then after we say now 8% of the sales of January will be collected in the third month, within the third month following the month of sales. So now that 8%, the third month will be obviously April. So now this is the third month. Therefore now that means the 9,000 once again times that by 8%, it will give us the collection from our debtors in the month of April. Then we say 9,000, we times this by 8%, then it gives us 720, which is the collection in the month of April. And we are doing a budget for April and for March. This is March, this is April. So now we go to our workings, we record that, then we say we had 9,000 times by 25%, then after times by 8%. So now this is 25% and 8%. And that collection will be an amount of 2,250 and 720. It's 2,250 and 2,250 and 720. 2,250, 2,250, and it will be 720 in the month of April. Then now we collect for February. And we say our credit sales for the month of February. Let us go and check. Credit sales for the month of February. Here we have February. Our credit sales for February, they amount to 12,000. And we know that out of those sales, 65% will be collected in the month following the month of sales. And the month following the month of sales is March. And when we collect that within the month following the month of sales, 5% of the discount will be granted. So now we have to make use of the discount. Why? Because we are collecting for the month of March, which is the month that we are doing a budget for. So now that means out of the 12,000, we have to say 12,000 times by 5%. Then that will give us the amount of the discount. We say 12,000 times by 5%. That will give us 600, and 600 is the discount. So now if that is the discount, it means we will say 12,000 minus the discount of 600. Then that will give us 11,400. Then we times that by 65%. We times that by 65% times 0.65. Then it gives us 7,410. It gives us, sorry. Let us first multiply that before we take into account the discount. We first have to say 65% in the month of March. Then we say our 65% is from the 12,000 times by 65%. We say 12,000 times that by 65%. It gives us 7,800. First, we start with the 65%, not with the discount. 7,800. So now this is what will be collected in the month following the month of sales. But out of that, there will be a discount that will be given. Then you say times by 5%, times by 0.05. That will give us 390 as a discount. 390 will be a discount. Therefore, now we say 390 the discount. Then you say 390 minus 7,800. That will give us 7,410. That will give us 7,410. So now either way you do it, you still get to the same amount. I just wanted to do it in the normal way that most people do it. However, the way I did it previously was still correct. We still get to the same amount, which is 7,410. Discount being 390, and the total of the collection in the month of March will be 7,410. Then now we have collected that. Let us record it in our workings. The month of February we have 12,000. Then after we say times by 65%, less 5% of the discount. Then after we have to do the second collection, which is 7,410. 7,410. Then after we do the collection now for the 25%. Out of the sales of February, remember we are still doing February, which is the 12,000. 25% will be collected within a second month following sale. Second month following January will be March, April. So 25% will be collected in April. And there's no discount for that. That means we say 12,000 times that by 25. And we see how much do we get. We say 12,000 times by 25%. That gives us 3,000 rands. So now 3,000 rands is the collection for the month of April. Therefore now in that 12,000 we times it by 25%. Then that will give us 3,000 rands. That will give us 3,000 rands for the collection of the month of April. Then after we go to the next month, and in the next month we are in the next month, and the next month is the month of March. Remember the reason why I don't collect April. Remember we're doing February previously. The reason why I don't do 8% because 8% will be in the month of May, and we are not doing budget for May. So now 8% will be collected in May, and we're only doing a budget for March and April. Then we come to the next month, which is the month of March. Credit sales for March is again 12,000, same as February. And we know that 65% of that will be collected within the month following the month of sale. That means it will be collected in the month of April. And 5% of the discount will be granted. So now we have to say out of the 12,000, we multiply this by 65. And it will give us the amount of the credit sales, 12,000, that will be collected as 65%. That means 7,800 will be collected. Then after we say out of that a discount of 5% will be granted. Then we say 390 will be a discount. 390 will be a discount. Then that will be minus 7,800. That will give us 7,410 as a discount. Then after we record that in which month, in the month of April, and we don't have to collect 25% because that will be May, and we are not doing budget for the month of May. So now that will be March, which is 12,000 times by 65% less 5% discount. Then that will be the collection of the month of April, and that collection will be 7,410. 7,410. So let us calculate the total of the estimated cash to be received from the collection of debtors. Then after we say 640 plus 2,250 plus 7,410, that gives us 10,300 for March. 10,300. Then after we say 720 plus 3,000 plus 7,410, that gives us 11,000 130. So now these are the expected sales: 11,130 and 10,300 for March and April. 10,300, 11,130. So now this will be our collection. We know that the proceeds here was 9,000, if I'm not mistaken. Proceeds from the disposal of item of property, plant, and equipment, where equipment was sold at a loss. Remember that we said the carrying amount of this asset was 13,000 and it was sold at a loss of 4,000, meaning it was sold at a price lower than 13,000 by 4,000. That means we said 13,000 less 4,000, that gave us 9,000. If you say 13,000 less 4,000, that will give you 9,000. So this is the amount by which this equipment was sold for. In which month? In the month of March. So we received 9,000, though that 9,000 was at a loss of 4,000. So now that is what we received, and that will be proceeds from the disposal of item of property, plant, and equipment in the month of okay, I think that is the month of April, month of March. So let us, that is for the month of, okay, they said a check was received on the 3rd of April. So now we receive cash for that on April. So hence we record that in the month of April. Then after, now we have to look at the payment of our creditors. We have to look at the payment of our creditors. We first have to start with the cash sales. So the cash payment or the cash purchases. Let us first calculate the total cash available, which is 11,130 plus 14,400 plus 9,000. That will be 34,530. 34,530. Then we have our cash available as 12,000 plus, okay, let us not write here because we still need an opening balance. 12,000 plus 15,300 plus 10,300, that gives us 37,000. That gives us 37,600. So now that will be our cash that is available. For the April month, we still need the opening balance in the beginning of the period. Let us start with the estimated payments. Our estimated payments. We had estimated receipts. We start with the cash sale, with the cash purchases, where we bought on cash or where we bought for cash. Here are our material purchases, and there was there any cash purchase of material? There was no cash purchase of material, because they told us that all materials are purchased on credit. So now for the first line item, there is no recording because there was no cash purchase of the material. All the material was bought on credit. Therefore, now let us do the creditors payment. Creditors payment. Creditors payment for the 2 months, which is March and April. March and April. And let us go and check now, when did we buy on credit and when do we expect payment to take place. The policy is always very important because the one that guides us how the payment takes place. The policy says that 60% on delivery within the month of purchase, subject to a discount of 2%. That means 60% of the purchases are paid in the month in which they took place. then when that take place, when that 60% is paid, a discount of 2% is granted. Then that means 40% in the month following the month of sales would be paid where there is no discount. So that means if we bought material on credit in December, 60% will be paid in January. 60% will be paid in January, and there will be a discount of 2%. But we are not doing a discount, a budget for January. And 40% will be paid in February with no discount. And we are not doing anything about any budget about the month of April. This is 40% and this is 60%. So now that means we will not be taking into account December, because December payment falls outside the budget frame that we are doing. Then if we bought invent on credit, or we purchase material on credit, 60% will be paid in the month of February where there is a discount again. Then 40% will be paid in the month of March, which is 40% where there is no discount. And we are doing a budget for March. So now that 40% will be, let me just do that correction. December, we say 60% will be paid within the month of December, and 40% will be paid within the month following the month of the purchase. And 60% there will be a discount. Then 40% there will be no discount. And we are not doing a budget for either December and for January. I think previously I phrased it wrong. Then in January, we say 60% will be paid within the month. They said 60% on delivery within the month of purchase. That means in the same month you bought that invent on credit, 60% will be paid and a discount of 2% will be given. So now 60% will be paid in January and 40% will be paid in the month following the month of purchase. And we are not doing a budget either for January or either for the month of February. So now we skip again January. We go to February and we say 60% will be collected within the month of purchase and a discount of 5% will be given. And we are not doing a budget for February either. Therefore, now we say above that 40% will be paid in the month following the month of purchase. That means of the credit purchase of February, 40% will be paid in March. So now we are doing a budget for the month of March. So now that 40% which is in March coming from February will be a total of our credit purchases for February, which is 12,000. Therefore now in that 12,000 we say 12,000 times by 40%. That will give us payment 12,000 times by 40%. That will give us payment of 4,800. And that 4,800 will be a payment for the month of March. So now we say it was February, where we say 12,000 times by 40%, and 40% is 4,800. 40% is 4,800. Then that is where the collection will stop. Then now we continue, we check for the next month. We check for the next month. And the next month will be for the month of March. The next month will be the credit purchases for the month of March. And we say in the month of March, 60% will be paid within the month, and there will be a discount of 2%. There is a discount of 2% when 60% is paid within the month of purchase. So now we say the purchases of March material purchases were 10,000. Then we just say 10,000 times that by 60%. And if we times that by 60%, it will give us 6,000. Then after we say times that by 2% to get to the amount of the discount. Then we say 6,000 times by 2%. And 2% will be 120 rands. That will be a discount. And in that discount, we say minus 6,000. Then that will give us 5,880, which is 5,880 will be the collection now for the month of March. That will be 5,880. 5,880. That will be March. That will be March, which is 12,000 times by 60% less 2% discount, 5,880. Then 40% will be times by 40% will be for the next month. Then we say 12,000 times by 40% will be collected for the month of April. That will be 4,800. Therefore, now that will be the collection for the next month, which is the month of April. Then we continue on that same note. Then we collect now for the next month, which is month of April. And we look for the credit sales for that month. Our credit sales for the month of April. Our credit sales for the month of April. Let me just recalculate that. Now there is something wrong here that I've done. The 40% here is 40% out of 10,000, not 12,000. Yes, that is 10,000, not 12,000. That is 10,000. Yeah, that is 10,000, which becomes 4,000, not 4,800. Then let us check if was that March 10,000 credit purchases for March. Yeah, it was 10,000. Then now we have 9,000. I was just thinking of 12,000. Then the month of April, now we have 9,000 as our credit purchases. We have 9,000. And we know that 9,000 will be multiply that by 60% and subtract 2%. That will be the collection for the month of April. So now we say in April, we have 9,000 of the sale that we made times by 60%. Then we say times that by 98% because we deduct 2%. And when we deduct 2%, that will be 5,292. Remember, we say 9,000 times by 60%. Just to get clarity, 9,000 times by 60%. That gives us 5,400. Then we say in that amount, how much is the discount? Discount is 108. That will be the discount. And discount is 108. We say less 5,400. That gives us 5,292. So now the amounts that I give here, they are after the discount has been taken into account. However, I think that you also do see the calculations and I do the workings for you. So now with that, we can calculate the total of the payments that we expect to make to our suppliers. 4,800 plus 5,880. That will give us 10,680 10,680. Then after we say 4,000 plus 5,292, that will give us 9,292. So these are our payments to our suppliers. Payments to our suppliers. Then 10,680 is for March. 10,680. Then here we have 9,292. 9,292. 9,292. Our overheads, we know that overheads are paid in the month following the month they were incurred. That means overheads for February will be paid in March. That means our overheads of 6,000, it will be 6,000 and 5,000. 6,000 and 5,000. So we have 6,000 and we have 5,000. Then our labor costs, they are paid in the month in which they are incurred. And therefore our labor cost will be 10,000 and 8,000 for March and April. 10,000 and 8,000. It will be 10,000 and 8,000. Then from there now we can calculate the total. You can calculate the total. Then we see how much the balance at the end. Our estimated payments, it will be 10,680 plus 6,000 plus 10,000. That will give us 26,680. And also on the month of April, 9,292 plus 5,000 plus 8,000. That will be 22,292. Then we start now in the month of March. We say opening balance is 12,000 plus 15,300 plus 10,300. Okay, that is 37,000 minus 26,680. That will give us a balance at the end of 10,920. And that will be the balance that we have. And that balance becomes an opening balance here, 10,920 in the next month. And we say plus 14,400 plus 11,130 plus 9,000. That will give us cash available as 45,450. Then we say less the estimated payments, 22,292. That gives us 23,158. 23,158. And that becomes our cash budget for this exercise. Yeah, guys, thank you for that. That is the end of this cash budget.